Let's continue looking at the benefits of monetary policy and also at the disadvantages, the drawbacks of monetary policy. So remember we talked about monetary policy being a tool which is being used by the central banks to control macroeconomic activities. So let's look at the benefits of monetary policy. So we're talking about inflation control. So let's look at central bank use monetary policy to control inflation because inflation is an enemy to the economy. No country really loves inflation getting out of hand. So promoting price stability by adjusting interest rates. So they adjust interest rates that they can influence spending and investment in the economy, helping to keep inflation with a target range because each and every country has a target range of inflation. The target range of inflation for most countries is between 3 to 4%. So this is some of the benefits of using monetary policy because you'll be able to use interest rates to influence the spending and investment in the economy, hoping to keep inflation in check. Then we have interest rate management. The idea that monetary policy allows central banks to manage interest rates. Some of the powers that they have in which they can use to control interest rates. We have an economy like the US, they've kept interest rates low for a very long period of time so they can stimulate more economic growth. So we look at monetary policy as it allows banks to manage interest rate, which can impact borrowing costs for business and individual. Because when they lower the interest rates, this encourage more spending, more investment in the economy, which is going to foster more economic activity. Economic growth is going to continue to increase, creating job employment, increasing incomes for people in that country. So we have to look at interest rate management being a crucial advantage because we have the central bank being given the powers to manage the interest rates. Then we have the issue of flexibility. So monetary policy we have what you call can be implemented relatively quickly compared to fiscal policy because when you talk about transmission mechanism, that has to go to roughly about was it 48 days or I still don't I've forgotten about that. So there's a transmission mechanism which is the process that is used to change monetary policy. We're going to be looking at that in depth once I do the research on that. But we are looking at monetary policy being much more flexible in terms of fiscal policy. Because fiscal policy is a demand side policy, yes, but it's controlled by the government. So when you look at central banks are the one who are actually in charge of monetary policy, they can adjust interest rates or conduct open market operation. Whereby we talked about the idea of them selling securities on the open market and also to respond to swiftly changes in economic conditions. That's the idea of flexibility because the central banks has been given the powers to adjust interest rates by the use of monetary policies. It's much more flexible as compared to fiscal policy. It does have to have certain procedures that have to be undertaken for them to actually see a full change in the economy. Then we have independence. Many central banks operate independently from the government because there's what separates them, which is a very crucial, important point, the idea of independence, allowing them to make decisions based on economic considerations rather than short-term political pressures, because that's allow it to become an independent entity that doesn't look at the short-term perspectives but look at the long-term perspective. It don't consider the short-term political pressures but consider the long-term economic considerations. So that independence allows them to work freely, and this independence can contribute to more effectively long-term policy making because if you are going to be able to be policymakers that make policies that that have a gain in the long run, which is very important when you talk about that in economics, the idea of long-term sustainability in terms of policy making.